Welcome to this channel AZ Accountancy. This is my second video lesson on basic concepts of accounting, and in this video you will learn how to record the transactions into journal. As you know, in my previous video I explained this accounting cycle. Now we are going to proceed from the first step of this accounting cycle, which is journalizing. Journalizing is the recording of transactions in the day book, or we can say recording the transactions in the book of original entry. Next, we have to understand what is double entry accounting principle. Double entry accounting principle says every debit has an equal amount of credit. So the transaction has two effects. One is debit and second is credit. Now you are thinking, what is debit and credit? An account is the individual summarized record of an item, for example cash account or purchases account or any personal account. So an individual summarized record of an item is account. Any account has two sides. The left side of any account is debit and right side of an account is credit. So double entry accounting principle says every debit has an equal amount of credit. So both the sides must be equalizing with equal amount. Now we have to learn the rules for journalizing. And in my previous video I told you there are 5 pillars of accounting: assets, liabilities, honor, equity, revenue and expenses. Assets, when increased it should be debited, and when it is decreased it should be credited. When we buy asset, it is increase of asset and we must debit the asset because we are buying it, and buying of asset is increase of asset. And when we sell the asset, it is decrease of asset and it should be credited. When we take loan from someone, it is increase of our liability, and when we pay off, it is decrease of our liability. Any increase of liability should be credited and any decrease of liability should be debited. Next rule for journalizing is for capital. Capital I defined in my previous video. Increase of capital should be credited and decrease of capital should be debited. Here we can exemplify when a company issues shares. This is increase of capital. Or an individual sole proprietor is putting his cash into the business, it is increase of capital. So increase of capital should be credited. And when he take off some cash for personal use in shape of drawings, it is decrease of capital, so it should be debited. Now revenue, when we sell an item, so revenue, you know, the price you charge after delivering the goods or providing the services. So revenue, when we sell an item or we provide any services, the price you are charging is increasing your revenue. So increase of revenue should be credited and decrease of revenue should be debited, because when someone return the goods to you on account of defective goods, so this is sales return, so you can say sales return is contra revenue account, and revenue when decreases it should be debited. Next rule for journalizing is expense. When we increase expense, it should be debited and decrease of expense should be credited. Now here I must clarify this. Any account has two sides, one is debit side, one is credit side. So increase must be recorded on one side and decrease must be recorded on the second side based on the rules which I just informed you. Now we are going to solve a practical example. These are few transactions. On 1st January 2019, ABC Limited started business with cash $20,000. On 2nd January, it purchased vehicle paying through bank $2,000. On 3rd January, it purchased goods paying through cash $200. On 4th January, it paid stationery by paying cash $50. On 5th January 2019, it purchased goods worth $100 on account. Remember this, a very typical word, on account. On 6th January 2019, it sold goods worth $500 cash. Dear listeners, every transaction must be affecting 5 accounts. I am repeating 5 accounts: assets, liabilities, honor, equity, revenue, and expenses. Now, let's see how these transactions are recorded in journal. This is our first transaction. Before putting into proper format, we must analyze it. And in analysis, we have to go through 3 steps. We have to identify at least 2 accounts which are getting affected from this transaction. And I believe you can easily understand which 2 accounts are getting affected. Apparently, cash account is being affected. And second, which we can understand, the business started with cash. So whatever the cash is put into the business, it is our capital. So we got identified 2 accounts. One is cash account and second is capital account. So you can see we identified very correctly cash account and capital account. Second phase of our analysis is to make linkage of these identified accounts with 5 accounts I told you before. Cash belongs to asset, and third step, asset is getting increase in the business because cash is coming in. So any increase of asset should be debited. And secondly, capital belongs to honor, equity, or capital account. It is also increasing, so any increase of capital should be credited. So we finally made our journal entry. You can see according to format, first thing is date, then particulars, then debit dollars, and then credit. And the first line in our particular is cash account because the debit account is written first. And after giving some indentation on the second line, we record our credit account. So finally we made our first journal entry, cash account debit and capital account credit, because cash is our asset and asset is increasing, it should be debited. Capital account is our honor equity account, so it is increasing, it should be credited according to rule. Second transaction is it purchased vehicle paying through bank. So again we have to do analysis. First account which is getting affected is bank account because we are not paying by cash, we are paying by check. So bank account is getting affected and bank is our asset, it is decreasing. Second thing, purchased vehicle, it is asset again. One asset is increasing, second asset is decreasing. So now let's see what is happening here. 2 accounts we got identified, vehicle account and bank account. Vehicle belongs to asset, bank belongs to asset. One asset is increasing, second asset is decreasing. Let's see how it is recorded in the journal entry. First, vehicle is debited, bank is credited according to rules. Third transaction, it purchased goods paying through cash $200 on 3rd January. The difference between this transaction and previous one, in this transaction we bought goods and goods are for resale purpose, and the items which are purchased by business for resale purpose is known as purchases. So we must record it with the name of purchases. So first account which is getting identified here is purchases, and second account which is getting identified here is cash account. So 2 accounts are identified, purchases and cash. Second thing, purchases belongs to expenses, and when expenses increase it should be debited. Cash account, because we are paying cash, cash is going out from the business. So cash is asset, asset is getting decreased, so it is credited. See this journal entry? The first account is debit, purchases account debit, cash account credit. One thing I also want to inform you here. Within the journal entry, there is a brief description after making journal entry. This is known as narration. You can see I am highlighting this. Goods purchased for resale. This is narration for this transaction. Alright, so we have to record narration as well after making each journal entry. Let's move further for fourth transaction. On 4th January, it paid stationery by cash $50. Again, we have to go through, because we are beginner here, we have to go through analysis. First account is getting affected cash because we are paying it, and cash belongs to asset. Asset is getting decreased. Second account which is getting affected is stationery account, and stationery is our routine expense. So we identified two accounts, stationery and cash. Stationery belongs to expense and expense is increasing here. It should be debited. Cash account is asset. It is decreasing here. It is credited because we are paying cash. Now let's see how it is recorded in the book of original entry journal. The date we mentioned 4th January. In the particular, the first line is stationery expense and second line by giving indentation cash account. So stationery expense debit, cash account credit, and after making journal entry we have put appropriate amount in the debit and credit side. Every debit has an equal amount of credit. This is the rule of double entry accounting principle. And our second last transaction is on 5th January 2019, it purchased goods worth $100 on account. Here I would clarify this. Whenever the word account is written on account or on credit basis or any personal name of any individual is written, it means this transaction is not on cash basis. This is on credit basis. It means we purchased goods $100 worth but we did not pay any cash. It created our liability. So when liability is increased, it should be credited according to rule. And purchases also belongs to expense. So let's see how analysis is made. Purchases expense is getting affected and accounts payable, which is our liability. So it is also increasing. Expense is increasing, liability is increasing. According to rules, expense should be debited because it is increasing, and according to rule liability is increasing, it is credited. So this is appropriately put forward to format of journal entry. The last transaction is on 6th January 2019, it sold goods worth $500 cash. Now you can easily identify here sales account are getting affected because sold goods, and the price you charge after delivering the goods is your sales revenue. So sales account are getting affected. And second thing is cash account. Cash is coming in the business because we sold goods, and cash is asset. It is increasing because cash is coming in because we are charging the price. And sale belongs to revenue, one of the 5 pillars of accounting. I repeating again, assets, liabilities, honor equity, revenue and expenses. So you can easily understand these journal entries. I hope this lesson had clarified your idea how to record journal entry in the book of original entry. Before going further, just subscribe this channel to watch more such videos on accounting and business.